Everyone keeps an eye on token prices, but the smart money's watching the infrastructure. A massive cap has just been lifted off an entire DeFi ecosystem, and the data's already telling its own story. Just a reminder, folks, this video is for entertainment purposes only. Only invest what you can afford to lose, and always do your own research before putting money into any financial product. These days, instead of just guessing about adoption, we can actually track liquidity metrics directly and on-chain. Analysts are keeping a close eye on top pool depth, liquidity retention, and the weekly changes in the outstanding USDCX supply to really get a handle on what's happening here. That's the newest stablecoin on the Cardano chain. And by doing this, we can measure real market traction. The thing is, highly liquid stablecoins are the absolute backbone of every single DeFi ecosystem. The thing is, Cardano hasn't historically had a stablecoin here. And what that basically meant is that Cardano's TVL, also known as total value locked, was essentially structurally capped because large-scale operations on-chain couldn't efficiently scale. But now, the arrival of USDCX smashes through that previous TVL ceiling. It now brings in new real-world credibility from institutions to support real-world payment flows, as well as large-scale asset allocation that was previously left on the sidelines. USDCX goes beyond your standard yield farming. It acts as a solid payment rail. This now unlocks real-world utility for cross-border payments and remittances, decentralized payroll, and global commerce, all on the Cardano chain. The most common criticism is that all this is too late with USDCX, but the on-chain metrics tell a different story. Why? It shows real evidence of real-time demand, and it permanently gets rid of this stablecoin bottleneck. That's structurally limited institutional access for years. Now, mates, I've been in the crypto space for over 7, probably close to 8 years now. And I have to say, one of the best areas that people often overlook is this space right here. It's the decentralized finance space, especially when you look at the value within this stablecoin ecosystem. And if we really sum it up by thinking about what Cardano is, they've really stood the test of time. The actual token, the blockchain, always working on new developments, and a lot of people feel like they've never really hit their stride yet. Now, I honestly reckon that where we are in the market right now is definitely a downturn from the peak. I feel like we're probably pretty close to the bottom. And what I reckon is that a lot more interest is going to come back into the crypto space. A lot more liquidity, more money is going to be flowing into Cardano, propping up the Cardano blockchain. And to be honest, I don't reckon there's ever been a better time to get interested in a stablecoin like USDCX that's launched on Cardano. Great liquidity, proven blockchain, stood the test of time. So you already know there's a fair bit of cash that could be made through these different ways, whether it's yield farming, just basic lending, or staking. It's all here. So this is definitely an area you want to keep an eye on. When it comes to Cardano, stablecoins and USDCX, especially on the ADA chain. And as we've sort of mentioned, a lot of people are saying the update's too late, but I have to strongly disagree. I just don't reckon it's too late. I think these markets are obviously cyclical, just like all markets. The stock market, the property market, the foreign exchange market, things go in cycles. And I reckon there's honestly never been a better time to get involved in something like this. Head over to DefiLIama today to check out the 7-day liquidity retention rate and see exactly how the ecosystem's adapted in real time.